Hello, everybody. I'm Ed Parcaut, and I'm here on Real Estate Jerky Daily. Normally, Mike's here, but he's still on vacay till Thursday. So you got me one more day tomorrow by myself, and then Mike will be back. So only 2 more days of just the facts. Just give me the facts, Ed. You can have nobody to joke around with. All right. So news that was supposed to come out today this week. It's all we have is major news this week. Tuesday is Case Shiller, FHFA. Tomorrow is mortgage applications, ADP employment, Fed statement, which is going to move the market one way or another. Thursday, initial jobless claims, and Friday, the big one, BLS report. But let's get into the Case Shiller today. And then I also have consumer confidence, which is shocking today. All right, Case-Shiller Home Price Index, which tracks the changes in the value of residential real estate across the U.S. And reported for the month of February. It's always a couple months behind. So that means it's probably even worse, better. I mean, like the national index, which cover all 9 U.S. Census divisions, reported a 6.4 annual gain in February, up from 6% of the reading in January. So I think, we're only looking at February, already in April, almost May tomorrow, right? Tomorrow's May. So we're already, almost 3 months behind on this report. And I think it's going to get worse. I think we're going to show more increase, which is better, but worse for all the other numbers. All right. Then Federal Housing Finance Agency came out with their report today because they both come out on the same day. The difference between the two reports is this one focuses on single family homes with only conforming loan amounts, anything below that. So 766, whatever. They showed an increase of 1.2% in February versus, what they were thinking, so that increased 0.5% year over year from the previous revised report of 6.5% to 7%. So both of these indexes are showing that the values of homes are continuing to go up, even though we had limited inventory. Now we have a little bit more, nowhere close to our normal. I think I did the numbers yesterday of inventory. We're up 13,247 nationwide for last week. They say if we keep the rates above 7.25, we're probably going to see an increase of 11,000 to 17,000 of inventory each week nationwide. We'll figure that out on Friday, what that means locally to us, because we do local numbers usually on Wednesday and Friday. State numbers on Friday, local numbers on Wednesday, like I said, but Mike's not back till Thursday. So they're still showing values are going up. So when you have clients who say, well, should I wait because I want the values to drop? Well, they're not dropping. They're still going up nationwide even. So if you look at California, it's even probably, 10+% if we could just get a report just for California. But the one thing that really shocked was a consumer, not really shocked, but shocked the market. And we're down 24 basis points today, and the bond yield is up 4 basis points to 4.65. As long as that bond yield keeps rising, that means rates are going to continue to rise because that's showing there's a fear of inflation. So consumer confidence came out for April, and it's at 97. Anything below 100 is not good. It's the lowest number since July of 2022. March number revised lower to 103.1. So in just a 1 month difference, we're down under 100%, 100. And that's everybody's worried about labor markets going forward and the future of business. I can see that. I've been worried about business for the last year and a half. And I see it really, having issues going forward. What came out today that really shocked everything and threw the market off was the wages and salaries for civilian workers increased 1.1% for a third straight quarter, and we're up 4.4% from a year ago. The advance included the effects from the minimum wage increase in about half of the U.S. That's, those numbers are what's going to cause companies to go under. There's a lot of companies talking about bankruptcy. There's a lot of companies who are in it, who are going, and I feel for them. I understand how that is. I understand you do everything you possibly can to have, your company for your employees, you grow it, you do everything. And then all of a sudden the government gets involved and they make these changes and messes it all up. And I don't care what you say. That's what this inflation's from. Our current administration spending way too much money than they need to. And they're not even spending it on our people. They're spending, and that's getting a little political. I know I'll get off my soapbox in a second, but they're not even spending it on us. They're spending it on other countries. We need to get back to helping us, and then we can help everybody else. It's like if you go and they say take care of the parents first so they can take care of the kids, just like on the airplane, put your mask on first and then do your kids. That's the same thing here. We need to take care of us so we can take care of the other countries. We need to focus on us. We need to get a lot of stuff in place and fixed, and hopefully we'll get that going forward. So today, I kind of went over, I just reiterate that both the Case-Shiller and FHFA, Federal Housing Finance Agency, numbers are up. One's at 6 and one's at 7%. So that shows values are still going up. That means California's probably 10%. Labor costs rise the most in a year, and it's a sign of wage pressures that we're talking about. The U.S. labor costs accelerated the first quarter way more than forecasted, and that's why we're seeing the numbers that we're seeing today with the bond market and the T-bills going up. So what are you going to do? Just focus on helping your clients understand what's going on and get that house that they can get into. I know it's expensive. I had somebody the other day, we were looking at numbers on an $800,000 home, and with everything and that payment at $6,200, that gets kind of scary when that payment used to be probably $3,500. It's a lot less when it was a long time ago. But and then also people are not really understanding where the numbers are with what the values of homes really are. I talked about it yesterday, where Modesto is the top overpriced market according to people who trying to buy homes. They think it's worth one thing, and the true value is worth way more than that, almost 37% higher. All right, so again, it's educating our borrowers, educating our clients, sellers, everybody, what we're going through. If you need my book, let me know. I'll send it out to them for free. Again, I appreciate you being here. We enjoy doing the show, and if it wasn't for you, we wouldn't do the show. So thank you. If you like what we do here, just subscribe, thank us, just let us know. And again, thanks for being here, and we'll be back tomorrow, and then Mike will be back on Thursday. All right, appreciate you.